Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, good afternoon. Thank you for coming on today.
Good afternoon.
Well, let's start with Wall Street, where overnight stocks closed lower again. This time it was the Dow closing lower, while tech shares on the Nasdaq were just about flat. Concerns again on moves by the Fed and U.S. claims that Russia is about to invade Ukraine. A fairly volatile session. What's the story in the global markets?
Yes, if you look at the U.S. market overall, it did show quite a bit of a continued trend of downward. Dow was down by 0.49%. S&P 500 lost about 0.38%. Nasdaq closed flat, and small mid-cap also fell. If you look at the overall situation in terms of Russia versus Ukraine, the U.S. State Attorney Blinken ordered closing down of a U.S. embassy there, and because of there's been quite a bit of a rapid buildup of Russian troops near the border, and this continues to be causing concerns for the overall market situations. Even though Russia's foreign minister have said that they are ready to use diplomacy in order to diffuse the tension, but it continues to be saying that the U.S. is not really actually not believing that kind of messages. And also on top of that, as you know, the St. Louis Fed President James Bullard have been saying that the central bank needs to be quite aggressive in terms of fighting inflation through raising interest rate. And he's been saying that rate needs to be raised by 1 percentage point by July. Meaning that maybe 50 basis point giant step of raising interest rate by 0.5% might needed in March. All in all, this is causing the volatility for the overall market, and U.S. futures market seems to be fairly volatile as well. It did show a bit of slight upward trend, but now it's down, so it's kind of confusing in a sense. All in all, we need to see actual rate hike first in order to see the market stabilize and see rising trend in the future. So for the time being, uncertainty remains to be quite high.
And Korean stocks reached positive territory a couple of times this morning, but on many of the same issues, both main indices closing lower in the end. Some of the biggest names down quite a lot, like LG Energy Solution, SK Hynix. Some overall net buying by individuals, though. Tell us about the domestic market.
Yes, as you said, Kospi is down by another 1%. This is mainly due to the foreign investors net selling of about 265 billion won worth of Kospi, and also Nasdaq is down by 1.5%, reaching down to 839.92. Based on actually our calculation, the fair price, assuming the worst case scenario where interest rate rises and overall global condition becomes quite poor, all that applied, we think the fair value of Kospi will be above 2,700 and also Nasdaq above 850. So now this market has fallen to below the worst case scenario. So we think that any kind of rebound could happen in terms of the futures. All in all, we did see South Korea's current account surplus falling quite sharply by half. And it decreased by 6.06 billion in December 2021. It is much faster pace because in terms of the export increases, we saw import increases to be much stronger because of the overall price increases. All in all, this causing an uncertainty in currency as well as uncertainty in terms of economic growth rate. Despite the overall earnings numbers coming through from Korean companies being very strong and actually above consensus, market seems to be much more focused on the macro numbers, and that resulting into the continuation of foreigners net selling of Korean market. We think that the U.S. needs to be stabilized in order to see Kospi as well as Nasdaq to stabilize in the future.
Well, you mentioned foreign selling and also the Korean currency. We see the exchange rate holding right at about 1,200 won to the dollar. It's much higher than a year ago, and depending on what happens with central bank policy, it would seem there is room for it to rise fairly substantially. What do you see driving the exchange rate right now, and what kind of range do you see going forward?
Right. Today, the exchange rate did go up slightly. Now it's hitting at 1199.2, risen by about 1.7. Very slightly. All in all, it seems that currency exchange rate continues to be at around 1200 level. If we think that the foreigners continue to be net seller of the Korean market due to the uncertainty of emerging market, including what we are seeing in Russia and Ukraine issue, we think that the dollar will be probably heading back to U.S. and therefore dollar index will be rising versus the foreign currency depreciating, and that seems to be affecting overall Korean currency as well. However, though, there's been a bit of a discussion about Korea becoming a currency basket for the special drawing rights. Now, if you look at the IMF executive board meetings, they're looking at Korean won to be one of the currency to be included. If that actually happens, then it'll be much stable overall currency environment where Korean won doesn't have to be continue to be depreciating when dollar appreciates strongly. All in all, we think that the Korea is in good condition in terms of the overall current account numbers as well as the trade surpluses numbers, and the Korea seems to be showing quite strong economic fundamentals, and therefore Korean won depreciation, the speed and the pace of it is not going to be that significant. So all in all, we think that around 1200 level, it is quite reasonable. On a fair value cases, we think that it is much below that 1200. So therefore, we think that the currency volatility might be reasonably stabilizing in the future as long as economic growth rate seems to be fairly in good condition. So we'll have to watch and see how it happens.
Well, finally, Mr. Yu, imports have been getting more expensive for Korea. Last month, they rose to the highest level in a number of years. The price level had eased late last year, but now it's rising again. Crude oil, energy costs up quite a lot, as are the costs of a number of other raw materials. What do you make of the import price data?
Yes, as you said, the South Korea import price have jumped more than 4% in January, faster than export prices. It to suggest a trade deficit streak for the first time since 2008 may go on to the little signs of easing as if you look at the fuel prices and commodity prices rising quite rapidly. Clearly, Korea is a big importer of oil. And therefore the oil price rising to 7 years record high having very negative impact. We think that this kind of trend could happen further. That affects the short-term volatility in terms of the import prices as well as the current account deficits. However, though, we don't think that this kind of oil price environment will remain to be very long period. The Russian-Ukraine issue will be probably settling down within the next a few months. If that's the case, the fair value of oil price would be somewhere between $65 to $75 per barrel. If that happens, then overall inflationary pressure could be reasonably better. And import prices will be reasonably better. So therefore, the current account numbers as well as the trade numbers would improve for Korea. But anyway, for the time being, the volatility remains in terms of the commodity prices, including oil, and therefore the overall uncertainty could be remaining in the short term.
All right, Mr. Yu, we'll have to leave it there for today. Thank you, as always, for sharing your insights with us. We appreciate it.
Thank you very much.